Getting ready for end of financial year tip 1 on assets. If you've purchased any assets under $30,000 this year, you need to make sure that you provide that paperwork to your accountant when your tax return's been done, because up until the 11th of March 2020, you can instantly write off any asset under $30,000. Now, due to COVID-19, that's actually been increased to $150,000 from the 12th of March to the 30th of June 2020. So if you have any major assets to buy that will assist your business in its future growth, that you've been thinking about purchasing and you have the cash flow permitting, now is a great time to purchase those assets and have the tax benefit of instantly writing them off in the one financial year. Another way the government's trying to stimulate the economy and help small business in Australia. From a bookkeeping perspective, you'll need to make sure that within your chart of accounts that you have an expense code that you can put these assets to under $150,000. You can either add a new account as expense, pick a number that's available and name it assets under $150,000. And we like to put a bit of a description in here, like this one here, just to flag to your accountant that these are the assets that you've purchased during the course of the year, and then they will do what they need to do. Now, come the 1st of July 2020, it's actually dropping straight back to $1,000. So any major assets, even if you wanted a pool car for the business that was a $15,000, $20,000 car, instantly write it off this financial year. You won't be able to do that next year unless the government changes legislation. But at this stage, it's going back to $1,000. So cash flow permitting, make those investments in your business, and happy end of financial year.